Hey everybody, welcome to this week's Middle Class Investor. This is Seth Martin. Thanks for coming in this week. Took a week off last week, as I mentioned the week before last. Went out of town. Went to Disney World, the happiest place or the most magical place in the world, or whatever as they say. Anyway, we had a great time. Kids had a great time. It was a lot of fun. But I'm back, and so I haven't really didn't spend any week at all, any of the week looking at market really very much. I mean, just watched a little bit of financial news. I thought what was interesting about the financial news is people have started to kind of catch on to the whole treasuries and yields increasing. There's starting to be more and more talk about that, which is, um, you know, I guess it's timely enough, that they're having those discussions now. Um, they're still talking about if, and it looks like, as we've been talking here, it looks like the trend is reversing in the treasury markets from up to down, which means yields are going from down to up. So here's the S&P 500. This is a very messy chart. I've got a lot of lines drawn on here. I think the most important line here that I'm looking at is this one. Which is, it's a channel that goes all the way back to 2016, and we've extended above the channel, and we've had five waves. So this could be what Elliott called a throwover. So if it is in fact a throwover, once we get some candles, once we get a close back below the channel line, this is coming down. Okay, that's the way it works. Now, it may come straight down. It may come to here, come up, and then come down. Sometimes they do come straight down, though, like what happened in oil in 2008. We can look at that. Let's look at, let's go to the other view for that, though. Charts, just while I'm on the subject, CL. Okay, so we get more time up here. So in 2008, this ended up being a throwover. I don't have it drawn on here, but this ended up being a throwover, and you can see it just came straight down, 78% in 5 months. That's a pretty good fall. So sometimes when you get a throwover, you can get something like this. Sometimes it'll fall, below. It'll fall back below the channel, rally a little bit, and then fall. Maybe not as dramatically, but sometimes you get a very dramatic fall like this. So just be aware of it. It's a possibility. It's not a guarantee. There are no guarantees when it comes to trading. In fact, I was reading, about, as you know, picking tops is very, very challenging and, next to impossible, if not impossible. There's some people that have pretty good models that are even at a pretty good model. It's plus or minus a year for major turns. So it's just very, very difficult week to week to do that. But what we're looking at is the model I look at for kind of a very long term or important turns in the markets is the Elliott wave model, and it's pretty accurate. The thing that can happen is a fifth wave can extend, which I've talked about here before, and it's been doing that. Now the other thing is possible is we get a sell off, or I'll show you here in a second, but or we get a triangle, and then the market continues to climb into next year, which is always a possibility. It's not, when you look at markets, what you really need to learn to think in terms of is probability. So, and I've talked about this before, in terms of where the market is today. Is it probable that after 9 years or whatever it is of going up pretty substantially now, is it probable that this market makes another 5,000-6,000 point run on the Dow? In fact, let's just put the Dow up there because the Dow is I like to use the S&P because it's more diverse, but the Dow is a good market to look at because it's very sensitive to and so is the S&P. They're both sensitive to the social mood factors that drive markets. This is on a log scale. Put that on a log scale. So you can see that the Dow on a log scale is in the throwover. It's above its channel line, and so what we're looking for to happen is something like these bars, and then start getting bars below this. And once we get bar below this, this should accelerate to the downside. The only reason I talk about this is I don't want people, the main thing I don't want, it's not really about predicting what's going to happen here. What's more important to me in this channel, in this YouTube channel, is to help you guys be decisive about something. So again, if we're thinking in terms of probabilities, the market's been going up for some period of time. If I start getting selling, if I start getting some selling, where am I going to step to the sidelines, or where am I going to take action? That's really what this YouTube channel is about for me, is because, and I've talked about this before too, the psychology. Once you start getting dramatic sell-offs, most people don't look at their account, maybe once a quarter or something, or once a month. And so they open their paperwork and they look at it and they say, man, down 15%. And they go, well, it'll probably come back. It's probably going to bounce. And without any kind of discipline around that, if it doesn't bounce, and then you open up the next month's statement and it's down 30%, and well, it's too late now to sell. I mean, you could actually talk yourself into staying in that position all the way down to, zero. Well, not quite zero, but I've mentioned this before as well. In 1929, people lost 90% of their money, 90%. So, and it took, I don't know, a quarter of a century for it to come back. So, most of us don't have that long to be giving to the market that kind of leeway. So I just think it's important to be able to decide or think about what it is you're going to do. If the market does this, what am I going to do? If the market does that, what am I going to do? If the market does nothing, if it just trades sideways, what am I going to do? So have a thought process about what you're going to do before the market actually shows you what it's going to do. Hope that's clear to everybody. That's really very, very important. It's next to the psychology of the market. It's probably the most important thing. It's where the discipline part of investing lies. It lies in, okay, if the market does X, then I'm going to do Y. If the market does A, then I'm going to do B. That's where the discipline really comes into the picture. All right, so that's the S&P 500. We're above the trend line, which it could be that this thing's just going to keep going. Okay, that's possible. It's not probable. Okay, given that, let me put a little bit more time here on the chart. Given that, okay, we've got a 1, so we've got this is called a flat here, this particular 2. So we got a 1, A, B, C, 2, 3 all the way up to here, 4, and then 5. We've got what looks like a 5-wave move. So at a minimum, we're looking for this thing to come back down here to around 15,000. So, I don't know what the percentage is there. We can figure that out. But why give that back to the market? That just doesn't make any sense. Hold on, let me grab this tool here. See what that is. Let's say we went back down to 15,000 from here. That is a minus 38.5%. So, nobody wants to lose 38.5%. And if you're in 401ks and things like that, you're pretty much going to, your 401k is pretty much going to mimic the S&P 500 or the Dow Jones Industrial, probably the S&P 500, but I put the Dow up here because it's a little less complicated looking, and it tends to be very, very sensitive to uh, hurting type changes at the turns. Okay, so let's look at interest rates. Again, I mentioned in the very beginning that people were going to they're starting to talk about interest rates really moving. We've been talking about that for a while, ever since we kind of broke out of this line here, and then once it broke out of this line, we talked about the Fed was going to go into some sort of rate raising cycle, and of course they've been doing that, and they raised rates here most recently too. So as long as we're above this trend line, they're going to probably keep raising rates. Now there might be some pressure on them, once this market really takes off. There might be some pressure on them to actually, hold rates steady or lower them again. But I don't know. The Fed likes to give the perception that they're in control of rates, and if the rates were going this way and they were trying to lower them, I think that would really hurt their credibility, and I think they would. I think a lot of people would start criticizing the Fed in a big way. But you can see here we broke out of this downtrend line, and this is probably why people are starting to talk more about it. I heard forever 2.4 is the line in the sand. 2.4 is the line in the sand. Well, we're above 2.4 now. We're, I think we reached 2.5 last week, and this could be, this could be one, this could be A, B, and we're going to make a C lower here before we go up. But this also could already be 2, and now we're in 3, and this is usually the strongest part. If this starts gapping, in other words, we start getting the candles where there's, literally a gap between the previous close and the next open, then that's a pretty good sign that this would then be a 3. So see really long. You could see a candle that looked like that somewhere in this next move up. Wouldn't be surprised if I did. Okay, let's look at volatility. Volatility's been very, very low, and people love it. They love it. They're loving the volatility. They're taking a lot of risk. They're adding to their positions. But when this starts to move very, very quickly. So, but right now it's range bound, and it's not only is it range bound, it's in the lower part of the range. It's spent a lot of time down here around this line. It's interesting. It would be interesting to see is when did we go back and draw that line. So if I click here and I check extend, take off extend, well, not too far back. I drew not too far back. 1, 2, 3, 4, 5, 6, 7, 8 weeks ago. I thought maybe it was going to come back into here, but sometimes I surprise myself. I'll uncheck the extend on these lines, and it'll come all the way back to something like 2 years. It's like a 2-year-old line or something. Happens occasionally. All right. I've done something here to change the way my screen works, but that's fine. It's okay. I think it's fine. Rather than me spend a lot of time trying to fix it, I think I'm just going to deal with it. All right. Let's look at Germany. You can see Germany broke this downtrend line. It's up in here into the resistance area, and it's possible that this isn't resistance. Okay, it's possible. Remember, in terms of probability, it's probable that the market comes here and turns and starts to go the other way, but it's not a definite thing. It's a probability, and the probability is actually pretty high. So I wouldn't discount this until we started making a couple of closes outside of this box area. Japan is actually above that box area, and it could continue to go. Japan's doing a lot of financial repression type stuff, printing, buying bonds, all kinds of things like that. So that could be part of what's happening there in Japan. If I take off the log, you can see that the UK is right at the top of this channel. It's potentially a place where it could roll over. We've got this previous pivot right here, and we're just below that. So I would say that we might run a little further. And you could probably take this box and move it over here. Whoops. Didn't actually move. So I could just take it and kind of put it right there. We might see the UK run up into this pivot area and then maybe roll back down to the other side of the channel, or start some sort of topping process. The larger decision area is up here, and it could very well make it all the way up here. So we'll extend that over as well. All right, that's UK. Let's switch over to the other charting software and look at gold. And well, here's oil. Let's look at oil since oil's up. Oil, we've got this decision box here. Oil's, it's got some sort of complicated, I don't know, this is some sort of ABC, some sort of WXY or something. Maybe resistance is going to be in this area. But it's definitely having to chew through a lot here. There's a lot of selling that took place all in here and here, and oil is not going to go up from here very easily on a technical basis. So, maybe look for oil to grind its way up into this area, and then maybe start its decline back down. Remember, I drew this a while back when we were talking about it was kind of in between these areas, and it might go down here or it might continue to go up into here. Obviously, the latter is what's happening, so we'll continue. It's always one or the other, right? You got a 50-50 shot kind of thing, but especially when it's in the middle of a range like this, there's really no way to know. There's really no trade here, except maybe you could sell some, call spreads above the market or something like that, or some put spreads below the market, depending on what if you were bearish or bullish. All right, let's look at the euro US dollar. This is a market that's totally got me bumfuzzled, and it's probably because it's right at the turn. Notice it didn't make it up into this. It looked like this was going to be our first move down, but then this looked really strong coming back up. So my gut feeling is the euro is going to probably make a new high into this area. Now notice right in here, there's a lot of congestion. Let me see if I can draw that, or I don't know if I can. Let me do it like this and like this. So right in this area, right in here, there's a lot of congestion, and this right in here, I'm hoping you can see this. This right in here could really shut down this trend. Right here it was falling like a knife, right? A falling knife. But right in here, there's a lot of back and forth, and so it could be that this is going to go. It could turn right in here, mainly just because there's a lot of congestion right above here. So it could run up into here and then start to roll over, maybe even a little higher and start to roll over. So I still think oil's it's probably a little. The euro's a little bit bullish here. Certainly, if we break above this high right here, it's probably going all the way to that box. It's probably going to take out that high. So I don't know. Just I'm keeping my eye on the euro because I do want to trade it short when this move is over, because I think it'll probably come all the way down here to a new low. So I'm keeping my powder dry for that trade. We've looked at let's see, the British pound US dollar. This market it came up and hit this area. It's probably, work its way down a little lower here. You can kind of see came into this area. I mean, really hot, which is interesting because that's what you'd expect here. You get some sort of consolidation and breakout, and then boy, it sold off just as hot. So you kind of got maybe potentially an ABC, or maybe even this is the beginning of a new impulsive move down. But certainly, I would be short this market right now. I would be looking for this to move at least into this area. Trying to think. I'm trying to think if there's anything else I should mention about this. Let me switch to silver in the interest of time. Silver and gold. Let's look at gold. These markets are doing different things, and so it's very confusing. The last time we talked here, I drew out these 3 different scenarios. It looks like maybe it's following this one, at least for now. So we might get a sell-off into here, and then a rally, and then back up, and so on and so forth. So we'll leave these lines on the chart. I mean, I'm probably not going to leave them on there too long, because by the time we get out here, this will all be worthless. I was just trying to give a picture of what might be happening in the different scenarios, and the difficulty in predicting movement in the market is it's always you have to kind of, it's never 100% this way or that way. It's always, well, I got about 65% of the the conditions lined up for me in this particular direction, so I'm going to take a trade. But there's always that 35% chance that trade doesn't work out. So just be careful about that, especially now, because we've got potentially a large turn coming in the broader indexes, and that's going to have a major impact on all these markets. So it's gonna set the direction for a lot of these markets once the bond market turns and once the equity markets turn. So just stepping back and looking at silver, it looks like to me it kind of wants to go up into here, or maybe even higher. Like this could be A, B, and C could be like way up here somewhere. But I think gold probably, usually gold and silver don't diverge too much, and when they do, silver is usually doing some sort of catch up. So I don't know. We'll just have to see. Could be that silver's going to make a new low here before it rallies. What have we not talked about? I don't have the U.S. dollar, the U.S. dollar CAD up here, but that's another market I'm looking at. You can kind of see this ABC pullback here, and then we've had this move up, and so it looks like this could be bullish. Now, these are, Canada is a commodity country, so some of this depends on oil, for example. So if oil starts to sell off, then this might not happen. But if it breaks this downtrend line, if you get a break of this downtrend line, and it, let's say it comes up to here. Here, let's use the annotation tool. Let's say it comes out of here and then retraces back into here, and it starts to turn back up. This would be a great place to enter this trade. But right now, I think it clearly looks like an ABC pullback, and it does look like it's done. But you'd want to see it break this downtrend line, pull back some, and then start to take off. So I'm looking at that one as well. One of the guys I look at that I go to from time to time, I've mentioned him before on here. I haven't looked at his website lately, but we could look at it real quick. Probably should have had it already up. but he's got his chart on here through. Let's see, open in a new window. That's what I want to do. Zoom. So you can see here here's our 2016 low. He's got his 1 ABC flat on here, 3, 4. I don't know. This is a little bit different than the way Elliott did it, but he's got us. He's also you can kind of see the throw over there. He's got the throw over on the chart right there. So this guy's a pretty good chartist. I like looking at his stuff. He uses the Wilshire. You really can't see that, but it's over here. It says this is a weekly chart on the Wilshire. Okay, well, still can't see it. It's right in here. The Wilshire is WLSH. For those of you that are interested in that chart. And then here's the 2009 low, and you can see what's interesting is this right here is identical to this right here. I mean, this is it's interesting. You know, we've talked about the fractal nature of the market. What's interesting is this move up and this 2 looks just like this move up and this 2. I think that's really interesting. And then this 2, this I'm sorry, this one right here looks a lot like this one right here. So it's just interesting how the market, you know, kind of does the same thing over and over again, but yet it still fools us, you know, so often. So I just think that's kind of cool. Anyway, that's really it. I don't have any interesting articles or anything like that to share with you. Bitcoin, we could look at Bitcoin real quick. Bitcoin made, you know, some significant highs. Let's see if I think I've got, yeah, here's Bitcoin. You know, a couple of weeks ago, it went up to like almost 20,000. And as you know, it's down from there like 35% or something. I mean, it's down pretty big. See it went to 20,000 or almost 20,000. And the other day it touched a low of 10,412. So that's a pretty significant, you know, move, I would say. Now it could be that this is just like an ABC pullback, and Bitcoin's going to go much higher, maybe 28,000, something like that. Or this could be, you know, the dead cat bounce rally. You know, where I mean, look at the volume on that selling; it's pretty high. You know, you could get this could be kind of an ABC move up into here, and then just boom. You know, the crazy thing about Bitcoin, and I've talked to you about this before too. There's really, you know, it'd be like I mean, you could almost say the same thing about dollars, right? Paper dollars. Why are people, you know, why is a paper dollar valuable in the market? Well, it really has to do with, you know, somebody's willingness to take it in trade. And what's interesting about Bitcoin is it really started off as something to use to trade, to buy goods and services. And now you don't hear anybody talking about that. They're only, and to me it was genius because it was outside of the government's reach, right? So the government, historically, what it does is something becomes money, and then they come in and they start creating legal tender laws, and they get control of money, whatever money is. Money is not created by the government. Money is created by the market, and then the government comes in and co-opts it. That's how history has dealt with money. That's how governments over history have dealt with money. And Bitcoin, I guess, could become similar in that way. But the interesting thing about it, like I said, is all the rave initially was about how it couldn't be, you know, just created by fiat like dollars can, and that there was a limitation to how many Bitcoins there were, and that the transaction costs were really cheap, so you could buy something using Bitcoin. You wouldn't have to go through a banking system and let bankers make their 1/8 of 1% on, whatever the transaction fee. So, but the interesting thing now is nobody's talking about that. They're only talking about it in terms of dollars, and how much a Bitcoin brings in terms of dollars, which to me is very, very similar to like your Tulip Mania. And we've talked about that before. If you just go and you type in Tulip Mania or Fever into Google, the Wikipedia thing is pretty good. You can just read that. It's a pretty good description of what happened. But I mean, when you read this, you're thinking, how could people possibly think that tulips were just going to go to the moon? All I can tell you is that's the way it always is. That's the way it always is. People, they don't, they're they're not looking at it going, hey, this is worth something. There's if you listen closely to like the financial media, they're justifying, instead of doing what they're doing for real reasons, what they do is they do something and then they try to build a case around why they're doing it. They're justifying what they're doing, and that's not um, it's not the same as like buying a stock, and justifying the price because of Amazon's future, what they're going to invest in, and how they're going to grow their business and all that. It's not the same. Um, anyway, it's a little subtle thing you can listen for if you like to watch the financial media. But on that note, I think I will just close the show for today, and we'll talk to you guys next week. Have a merry, very, very merry Christmas. Next Monday is Christmas, and enjoy time with your family. But most of all, we need to remember what Christmas is really for. And I don't know how the audience is here, about Christmas, but it's the birth of Jesus Christ. It's the time of the year we celebrate that. The cool thing about it is we get to celebrate with family, and it's always food and presents, and it's fun for kids, and it's cold outside, and all those good things are good too. So you guys have a Merry Christmas, and we'll be in next week before the new year to talk about the markets again. Take care, everybody. Bye bye.